So in today's video, we're looking at the Kaldi app. It's like a fintech that's targeting Gen Z and millennials by getting them to save earlier and better. And they've got some different cards here, investor cards, premium investor cards, etc. Let's have a look, and then we'll look at the investor deck as well. It's supported by MasterCard, and they're going to auto-invest in Vanguard and Fidelity funds for index funds and other funds run by Fidelity. And they've partnered with a bunch of retailers with cash rewards, and we'll look at this in a bit more detail in a second. They want to launch an MVP, minimum viable product, where you just basically shop and then you basically invest, which is interesting. And then they want to offer a saving product with a card as well, and then investing. So somewhere, it reminds me of some other companies that I'm aware of, but they've got a good team, which is always good, because sometimes a lot of brands don't always have a lot of expertise always. They've got a nice UX and stuff, and it really fits the branding. And they've already got 28% of the retailers they want to. They've already raised 1.7 million to date, and I think they only launched this quite recently, and they've raised 476k of the 600 target. So I have to do this quickly, both show you. I'm probably going to be investing as well. So we'll download the buy now, pay later is not now. It's smile now. Sorry, save now, smile later. I love that, actually, because Klarna's buy now, pay later, obviously. But these guys are saying you can actually spend money and then save and invest it, which, yeah, I actually love the idea. I think it's amazing. Say hello to the savings revolution and embedded savings app that auto invest cashback from 150 high street brands at the point of sale directly into a user's own equity index. That is great. The young aren't saving. Retailers need to get the loyalty from Gen X and millennials. Fund management companies are struggling to get young people to invest. This is the solution. They want to transform this by introducing young people to investing and helping them to buy houses and invest for a secure retirement. Man, I wish I had this when I was in my 20s, to be honest. Anyway, it's a unique proposition, easy to find, because it will be at POS machines and it will be at retailers. Hopefully they'll have like pictures and logos, places, blah, blah, blah. Offline and online discounts. Set a savings goal and invest. Sounds good. The app promotes a retailer link. The retailer creates marketing leading rewards for users. Market leading rewards for users, so you can get discounts, and then you invest those discounts. So I think that's really smart. They've got a good team: Mark, Justin, Nathan, and Lewis. Very good. They've got a target of 100,000 users by at the end of this year. Not sure, but sounds good. Got some advisors as well. Jalin was, I don't know if that's how you pronounce his name, but he was the CMO of Tide, which is very good. And he's been CMO of other brands as well. And he was a venture partner at Fidelity as well. Interesting. So they've got a good team here. You can skip this bit if you want. Customer experience at John Lewis. Law firm helping SoftBank. That's Graham. Rupert, the financial advisor. He's had some exits as well, Rupert has. And Mark has 20 years advising e-commerce clients on payment and tech integrations. It's going to be a big part of it as well, because I guess e-commerce is a really, it's not just about the bricks and mortar, it's probably about e-commerce sales as well. And they've got some of these brands already, which is good. Doesn't say which ones they've got, but I think they're the ones they're targeting. So this is what I do, obviously growth marketing. So let's have a look at what they're thinking of doing. Let's actually get this full screen. I've got a cold start to 5,000s, working with finfluencers, the influencers in the fintech and finance world. Email marketing and referrals. Is that the conversion rate? 40%, that's pretty good. They think they're going to get a cost per lead of £3.50, which is great, because remember that number. And the industry average is 25. So they're saying they've got 3,000, which is good. 3,000 already. So they've done some pre-launch activities. They're going to use earned media, influencers, as we've talked about, and partnerships. They're going to incentivize. They're going to use A/B messaging testing across broad and targeted content campaigns. And they're going to do some partnerships, and that makes complete sense. I think partnerships could be massive for them. They're going to sponsor threads and Q&A sessions on money savings expert. That's interesting. I hadn't thought about that. That is interesting. I think the obvious thing is ads as well. I think, that could be very good. Referrals, I think maybe an ads, paid media ads to a referral campaign, I think could work quite well. So if they get in £2-3 for a user, but then that user refers 5 people, then it ends up being a lot cheaper, right? 50p, 75p, etc. They want to target 2 different demographics: the Gen Z kind of trend following young professionals, and then the family orientated savvy shoppers, the kind of coupon collectors, people that are getting concerned about the cost of living crisis, etc. Actually, everyone's concerned about it, but people that are most hit by the cost of living crisis. Early followers of this channel will recognize and remember I warned people in 2021 about the cost of living crisis. So if you follow this channel, you do get early warnings about what could happen in the future. This is not a warning, Kaldi. Kaldi is actually the inverse of that. I think this could actually be quite good for the future. So 7 of the top brands featuring Kaldi's cashback offer: Foot Asylum, McDonald's, Nando's, Primark, Foot Locker, Domino's, etc. They say they got 7 here, and then they say they've got 9. I'm not sure about what that means. It's quite hard to read this in yellow over white. I'm not quite sure why they did that. It's like really almost impossible to read. So I'm not going to try to. They've got some of the competitors here on cashback. Again, it's quite hard to understand. I guess like it's 4%. It's a little bit hard to understand. But I get the overall picture, and I think the overall picture might be strong enough. I love the fact they've got a competitor analysis here. I personally think this is most like Moneybox and Plum in terms of auto investment, but it doesn't have, Moneybox and Plum don't have the retailers. So I guess those cashbacks are like top cashback, but then that doesn't have savings. So they're melding those 2 ideas, like a cashback app and an auto investing app, into one super app for young people and cash strapped young families. And I've got that here. I've got cashback of 2.5%, which is fantastic. That's really, really good. Obviously, it looks like some of them are doing a little bit more, but they don't do the auto investment. So they're saying there's 50 brands that do rewards, so they'll all want to be on it. Revenue streams. So somebody gets an offer of like save 10% at Costa or a brand or whatever. Kaldi gets a small percentage for advertising revenue, so a couple of p. But it's good they've got advertising revenue as well. When someone spends £100, they get 20p as a transaction fee. That's what Kaldi gets. The retailer gets £100. Kaldi gets £4 commission. That's 4%. And the user receives £4 into the Kaldi account as I guess as the kickback or the cashback. Well, that's 4%, not 2.5%. So, or maybe it reflects the discount as well, but then the discount's at 10% over here. But that was Costa, so maybe it's just aligned to the discount. So if it was at Costa, you get 10% in, but maybe Foot Locker was 4%. Anyway, you get the user gets a huge amount of cashback, and Kaldi gets a good commission as well. And then once somebody saves and invests, Kaldi charges a very small management fee. But once those assets under management gets higher and higher, that fee really stacks up. The user also gets their money invested. So to me, this looks like on £100, let's forget about Costa. Let's think about the trainers for a moment. And let's say someone's spending £100. Kaldi probably makes about, what, £4.30 or something like that off the get-go. But then if the user has invested lots of money over time, their assets grow, and Kaldi's making more money off that user, and the user's making money as well. The user, it's a very smaller fee, and the user's saving, investing, so kind of everyone wins, which is awesome. And of course, as the brand grows, advertising revenue is going to grow, and fund management revenue is going to grow. Like it's all going to. So I'm quite excited by this. I think it's really interesting. Kaldi projections versus competition actuals. So Kaldi wants to generate 3.8 million users in the UK, a market penetration of 9%. So it thinks it'll be bigger than Curve, but smaller than Revolut. Although Revolut has 8, I think it has about 8. I thought it had more than that, but I don't know how many it has in the UK. Maybe that's how much it has in the UK. It's not clear whether this is UK users or global users. Nevertheless, they think they have a £450 million obtainable annual revenue opportunity in the UK in a 34 billion addressable market. That's the TAM. Okay. Earns most of it from merchant commissions, 70%. So every time someone shops, and I think people are going to shop using this, to be honest. The economics of it, earnings projections, assuming a go date live of, I guess that's April 2024, it's been cut off. So they're going to make, is that 100k profit in the first year? That's what it looks like. 500k revenue and what, about 20%, roughly, a bit less than that, 15 to 18% profit. And then next year, it's hard to tell if this is minus. I can't see if this is minus or not. That looks to me like next year's going to be minus. 2026, it looks like it's getting profitable. That is a bit more realistic, and about 5% profit margin. And then in 2027, it's looking about a 30% profit margin. And in 2028 to about 50% profit margin, which is interesting. They're talking about a CAC here of 37, but then they talked about a paid media cost of acquiring a customer at 250. So that's obviously a little bit different, but maybe that's swallowed up with all the other cost of acquiring a customer, such as retention and paying staff and all the other costs. But the lifetime value is 20x that, roughly. Not quite 20x, 15 to 18x. But anyway, it's all looking pretty good. Obviously, these are just forecasts. They have to say something, but they've already raised 1.1 million early on in 2023, and they're looking to raise 600k. They've done some pre-launch stuff, and now they're kicking off. And they're going to kick off performance marketing, which is my bag, growth marketing. So they're going to spend 33% of it on staff, 20% on marketing, 16% on legal, 14% on back-end solution fees, and 12% on other. If this were me, I would put more into marketing, because why not build a bigger waiting list and bigger referral list? So get 20, 50, 20,000, 30,000, 50,000 on your wait list, and then raise again in 6 months to get the solution fees and the staff. But I'm not running the company. So anyway, they've raised 1.7 million to date. They've got some brands, blah, blah, blah. They want to offer the free cashback from retailers, no markup on index funds, a link up family accounts. That's interesting. That kind of makes it intergenerational for the future, which is good. Extra cashback for up to 5 referrals. I think that's a fantastic idea to incentivize referrals. That is a massive growth feature. Junior ISA and ISA compatible is a very good idea. Roundups and budgeting tools, a bit like Moneybox. In-app cash transfers, splitting bills. I think that's a really good idea as well. So I think this is really, really interesting. Let's see if we can get to, I've already raised 75% of the target. We can go on their website in a second. So they only had 150 investors and they've already raised that much, which is pretty good. So it's an average of about, 2,000-3,000, I guess. Not really much reward. You get these different cards or whatever. Okay, have a look at their website. It's a cool website, to be honest, already. It's a cool website. And that's very much Gen Z, with the pastel colors. I used to work for NatWest, and I had a hand in designing their cards. And I said, don't do pastel colors because NatWest's demographics is not Gen Z. But these guys know about this, and pastels is very much Gen Z. And younger millennials. I do think millennials and slightly older people, kind of the 35 plus market, won't like the color of the card. But I think 18 to 30-year-olds will love it. Wonder if they should do one on black instead of having it multicolored on black. Might be a kind of cool option as well. That could be for, looks a bit more feminine. But if they did it on multicolored on black, it could be more masculine. Anyway. How Kaldi will work after launch, sorry. loaded Kaldi app with cash, so people put cash on, and then they shop, they receive cash back, and then they auto saves and invests, and people can watch their money grow. So if you sign up, you get a limited edition card, and you enter a competition, and you get, if you refer 5 friends, you get extra cash back. So they're already doing a referral campaign even now, which is good. They haven't put the number actually. I mean, they've just put over 50% of the returns will have come from cash in your 20s, but they haven't put how much it'd be worth. I think that would be instructive. Probably worth $1 million or something. It's interesting they're quoting Ken Fisher and not Philip Fisher, who Philip Fisher is far more, from what I understand, more famous and more accomplished than Ken. I'm sure Ken is accomplished as well, but Philip Fisher wrote some fantastic books. Basically started, was one of the proponents of growth investing many, many years ago. Conservative Investors Sleep Well, I think, was one of his books, I believe. He's written some fantastic books, Philip Fisher. If you're interested in learning about investing, Philip Fisher is one of the key people that I sincerely recommend reading from, or reading his books. If you invest with double the amount of someone who started a decade before, you actually see lower returns in the long run. So they're saying if you invest early. I mean, I think that's a little bit convoluted. I would rearrange some of that text, actually. I think it's a little bit confusing, especially for people that don't have a massive time attention span. I'd put something like invest in your 20s and you'd earn X more than someone investing in their 40s or 30s. But anyway, I still I really like what they're doing here. They're using carousels. They've got cool little like emoticons, characters. Yeah, I think it's really good. Oh, look, they've got those different colored cards. They've got a dark card as well. Cool. Silly little thing here, but people do care about this kind of thing. I suppose I only care about it because I was involved with the card design at NatWest. But anyway, which is similar actually. If you look at NatWest cards, I haven't got mine to hand, but actually looks a bit like that, just a bit darker. Anyway, you can share rewards to family and friends. That's a feature they want to do in the future. I think that's fantastic. You can send cash to somebody. That's amazing as well. I really think this is really, really good. Not everything works in investing in startups. I've seen companies go bust. Probably I've invested in about 100 companies, small amounts, not huge amounts, but I've invested in 100 startups, and I'd say about between 8 and 10 have gone bust since 2020, and another probably 5 or 10 are in difficulty, so will probably go bust. But the fintechs I've invested in have done quite well. Only one of the fintechs I've invested in, fintech is the main sector that I've invested in, fintech and robotics. The robotics companies are struggling a little bit, but the fintech companies are doing quite well. And this reminds me a bit of like the cashback apps, which, you know, I haven't been involved in, but I've invested in a lot of fintechs, Plum and Moneybox and a bunch of others. And I really like this. I think it's very early to invest in them. They're only valued at 8 million, which is really small for a fintech app. They haven't got revenue at the moment. So obviously there's risks. There's always risks with this kind of thing, but they've got a few things in which I think is interesting. They've got the referrals, which is a growth campaign. I believe that they'll have a low cost per acquisition on paid media. I believe they'll be able to do successful partnership campaigns because, you know, the likes of McDonald's or Costa or John Lewis or whoever have big email lists. And, you know, I don't know if they'll be doing WhatsApp now. I think John Lewis do have WhatsApp for business. So they'll have a lot of people on WhatsApp. I wonder if they could send them, you know, earn cash back with Kaldi, the fastest growing cashback savings app in the country, or something like that. People would click and people would join Kaldi. So I do think performance partnership marketing would work for them. That's why I'm quite interested in this. I can see them having 100,000 users in a year or two. Maybe it won't be maybe they won't get the results exactly as they're predicting, but I do think they could be quite big. Obviously, there's a risk of them going south, but I think it's an asymmetric kind of game here. You know, I think they've got a stronger than average chance of getting to 100,000 users. You know, I think it's more than 50% chance that they'll get big. You know, purely even them promoting themselves on Crowdcube could be a revenue driver, because not only can they raise capital, but when Gen Z learn and millennials learn about Kaldi, maybe not in this round, maybe it's the next round, but they might start to get thousands of investors like Moneybox did. You know, Moneybox and Revolut and Monzo, they get thousands of investors on these platforms, and that boosts their user acquisition. every time they do a fundraise, they get another, 500 to 1,000 new users just off the back of that. And if they've got a referral campaign, they'll get not only those investors, but those investors will refer their friends, yada yada. So I think they've got a good team. I really think this is great. It's a shame I didn't see this in 2020 when I had some capital from when I shorted the investment markets in the market crash. I would have put more money in to this than I can afford to put in now. But I think I will be investing in this. I like this. I'd love to put in, 5 figures. I don't think I can afford to put that in. It's probably going to be 4 figures for me, which is how much I can afford. Looks to me to be roughly the average, to be honest. With investing in these in startups, you have to realize that some will go under, and you have to be able to afford the losses. Companies do go bust. Meatless Farm, huge company worth over 200 million, recently went bust. A really exciting robotics company I invested in, small robot company, went bust. But then again, look at Moneybox. That went from 200,000 users, it's now got 1 million. I also invested in How About, went from 20,000 users to 2 million. So I've seen this before with, with fintech and with tech companies, software as a service. I do think that if you have a good idea and paired with good marketing and funding, I think one can scale. So my conclusion is I'm going to be investing in this. I don't know how much, probably a small amount, or at least not as much as I would like to. I'm not a financial advisor, but I would never put in, I've not yet put in more than about 15% of my overall funds in any one company. I don't think, actually that's not true. I've got, in Moneybox, I've got about, I think I've got about 10-15% in Moneybox. But overall, I wouldn't, I don't put in much more than that, unless with Moneybox, it's over, I think I've invested 2 or 3 times. So it stacks up to be 10-15%, but I wouldn't put in a huge amount, a huge percentage of my overall portfolio in the first round in one company. That's not my style, but I do have high confidence in this. I think they'll do very well. So it's tricky. I like it. Let me know what you think. Questions, queries, concerns, comments, let me know in the comment section below. I haven't done one of these videos in a long time, purely because I don't think there's that many companies of a lot of high quality that have come to the market. But this one for me stuck out, so I thought I'd make a video about it. Let me know what you guys think. Like and subscribe. Check out my other videos about investing in angel investments or in property or in equities. Like and subscribe. Remember that knowledge is power, especially the right kind of knowledge, and progress is everything. And I'll see you guys in the next upcoming video. You might like one of these videos. Take care.